Welcome to the channel, everyone. In today's video, I'm going to be explaining ICT's power of 3 concept, and then towards the end of the video, I'm going to be giving you 2 strategies that I use that are fundamental to SMC trading, and so if you don't know these strategies, you're missing out. And as always, they're simple to follow, easy to learn, and easy to implement. So if that's something you're interested, make sure to stick around to the end and leave a like, subscribe, and join the Discord. Let's get into it. Okay, so ICT's power of 3 is also known as AMD, which stands for Accumulation, Manipulation, Distribution, and it is based on the theory that this is how the market moves. You get your accumulation phase, then your manipulation phase, and then your distribution phase. So you can see that here, color-coded it, hopefully that's helpful for you. The accumulation phase is going to be your range, so while it's not going to look perfect as I've drawn it up here, you're going to have some liquidity above the range, and then you will have some liquidity below the range. Obviously the structure, market structure, won't look perfect like I have drawn it here, but you'll begin to learn to mark out for yourself and see liquidity. You want to see a range, and that's going to be your accumulation phase. Basically what's happening in this area is that price is just moving sideways. The institutions are engineering liquidity on both sides of the market, and then they'll take one out before moving in the opposite direction. So here we move on to the manipulation phase, and seen in red, what you get is a sweep of the liquidity of one side. So if you're going long, then it would be like this. You'd get sell side liquidity swept. So you can see here, all these equal lows swept, and then price shoots back up. So you want to see price just sweep the liquidity and then shoot back up. And this confirms that there was a manipulation phase here. It's always quite short and just takes out liquidity and activates all the institutions' buy orders in this area while taking out stop losses of all the retail traders and other institutions. And then you move on to the third phase, which is the distribution phase, shown by the green, and this is just where price is moving in the direction and it starts to trend. You may already know the price normally either ranges or trends, and this is kind of why, with the in-between phases of the range and the trend being a liquidity sweep, which is known here as manipulation. So hopefully that all makes sense. I know I went over it quite fast, but I feel like it's quite an easy concept to grasp, so I'll go over it a bit slower now. But basically there's 3 phases of the market that you're looking for. First is the accumulation phase. You're looking for a range, liquidity on both sides of the market, or at least one side. You could have something like this, you could have the highs being all over the place, not really any liquidity there, but there's still liquidity on this side, so it's likely that this side will get taken. But as I said, it doesn't have to be perfect. You're just looking for the range. So I'll just move that back down there. And then the second phase, you're looking for manipulation, just liquidity sweep of either side, quick shoot down, shoot back into the range. That's your manipulation. And then the third phase is the distribution, where you start to trend. So then you're trying to enter in the manipulation phase, catch an entry, whatever your strategy is. I'll get into some in a minute, and then just let the trade play out and hopefully ride the trend if you were right. So now hopefully if you understand that, we can move on to the strategies that I'm going to show you that I've been using. They're not just stuff I've stolen from someone else. I mean, everyone uses them. They are kind of textbook SMC strategies. But the first one is going to be looking for a demand zone somewhere in the past that aligns up below this accumulation phase. So you're looking for liquidity, an accumulation, a range above your zone, a clear demand zone in this case, with some imbalance, maybe some liquidity taken out before the demand zone, and just all the things we've talked about in previous videos and you've learned from maybe other YouTubers or whatever. You're looking for a high probability demand zone below an accumulation phase, because that gives you a very high probability that price would manipulate into your zone and then start to distribute upwards. So that's the first entry that you could take. Place your limit, buy limit on the demand zone, stop loss below, and then take profit either at the higher of the range or set risk reward. I like to go for a 1 to 3 most of the time. Gives you room for a lower win rate and you can still make good profits. And then the second strategy is going to be just waiting for a pullback to a discounted zone. So for example, there may in here be another demand zone that you can mark up, and you're just going to wait for price to come back into your zone effectively. As simple as that. You don't have to wait for another accumulation phase above this zone. If you do, then it's obviously going to be high probability, but you can just wait for price to do something like this, and then maybe even go for a lower time frame entry and let price take off. So that is the second entry that you can look for, just waiting for a pullback, and this is basically a confirmation entry. You've had the accumulation zone confirmed by tapping into your previous demand zone, and then shooting up, breaking structure, change character, all that stuff, and then you're waiting for price to come back down into your zone and take off again, targeting either this high or your set risk reward. And this can be a useful way to trade if you miss your first setup, or if you can't spend loads of time in the charts, maybe you wait just for the perfect setups where everything's confirmed. But whatever it is, whichever one you want to choose to trade, or both, just don't overtrade. But these are two very simple strategies using ICT's power of 3, accumulation, manipulation, and distribution. So we will get into the charts now, where I'll show you an example for both of these. Okay, so we're on gold here on the 2-hour time frame. This does work on any time frame, just to clarify. The higher time frames I generally prefer, maybe like the 1 hour, 2 hour, 4 hour, but you can go down to the 15-minute and use it on them as well, and even the 1 minute. So whatever is your trading style, I'd stick to that. But if you're not having too much success with the lower time frames, then maybe check out the higher time frames. But then if you just want to pause the video here and take a look at this chart, analyze it a bit, see if you can look for any accumulation and manipulation distribution phases, and see if there's any trades that you might have taken. So the one that I was looking at, if we go down here, what I see in this area here is a clear accumulation phase shown by the range. You get a strong pullback, but if you're familiar with Wyckoff, after the big push down, you do get the automatic rally, which is normally a big push up. But as I said, you don't need perfect liquidity on both sides of the range, but you can see a nice accumulation phase here. You can see price just ranging, going sideways, especially in this area here, creating some liquidity, go up there, some trend line liquidity, and just moving sideways. And then you get push down and then a strong push up. And this is something you're going to be looking for, this kind of V shape where it just pushes down and then pushes up. 2 bearish candles, 3 bullish candles, huge candles, not many wicks on either sides, and you get 1 candle close below the zone, shoot below, and then shoot back into it. So this is a very valid setup. And going on to the first strategy, so I've just switched to Oanda here. That's why you get this candle. This is what I normally use to mark on my charts, Oanda. So this is just some spread affecting price, don't worry about that. And I'm on the 4 hour now, because what I wanted to show was when you look back in the charts, you can see over here there was a nice demand zone that you could have marked up. When you do your weekend analysis, looking at the charts, mark up your zones for the week, anything above or below price. And what you'd see, you'd have it marked up something like this, and you see an accumulation phase. You might go to the low time frame, or you don't even need to go to a low time frame. You can see on the 4 hour that you still got this accumulation phase, and then what happens is price pushes into the demand zone and then shoots off. And so what you get here, you could place your buy limit, as I said, on the demand zone, stop loss there, and you can target 1 to 3, hit very easily, or there's this supply zone up here, you can target there, 1 to 5, but just stick to whatever you're comfortable with. You can target some liquidity above there, 1 to 4, whatever you want to target. That's up to you. The strategy is mainly just for showing you how to get entries. And then this is the first entry, and the second entry, as I mentioned, is going to be like a confirmation, a retest entry, and you could either stay on the 4 hour, mark up this zone. However, this is quite a big zone, and so if you wanted to refine it a bit, you can go to the lower time frames, on the 2 hour, and you get something like this. Nice 2 hour zone. You can really see the push down and then push up. Again, it's a bit different between different brokers, but I'll check on ACAP as well. As you can see, taps in nicely and then shoots off. Again, you could place your limit on the demand zone, stop loss below, and target 1 to 3. It's already hit. If you want to target up there somewhere, 1 to 5, again, over up to you. But the entries, nice tap in, shoot off. So those are the 2 entries that you can get. If I just go to 8cap as well, then you can see get lower risk reward. It's a bit of a different zone, but as long as you're consistent, you still get a nice trade. And if we again set our stop loss there, going from 1 to 3, hasn't been hit yet, but price pushed up, made a little pullback, looks like it will continue upwards. And so those are the 2 strategies. Hopefully you understand them. If not, send me a message on Discord, leave a comment. So you're looking for accumulation in the form of a range, then you're looking for manipulation, sweep the low or high of the range, take out liquidity and then push back in. Ideally tapping into a supply or demand zone, below or above. the range and then taking off. And then the second entry, you can look for a pullback into the extreme supply or demand zone, because the reason behind that is that a lot of institutional orders were placed here and there's imbalance. Price will have to come back here, mitigate their orders, and then the institutions are going to place the rest of their orders in this area again to take price upwards again. That is the underlying concept and theory behind the strategy. So again, hopefully you did learn something and hopefully it makes sense. And if it did, and if you did like the video, then please do leave a like and subscribe to the channel so you don't miss out on future videos. But as always, thank you for watching and I will see you in the next one.